Have you ever wondered how digital currencies and blockchain technologies evolved into the powerful forces they are today? The story begins in 2009, a year that marked a significant turning point in the world of finance. Amid a global financial crisis, a mysterious figure, or perhaps a group, going by the name Satoshi Nakamoto, introduces a white paper titled Bitcoin, a peer-to-peer electronic cash system. This document was the blueprint for the first digital currency, Bitcoin. The enigmatic Satoshi Nakamoto, whose identity remains unknown to this day, aimed to create a decentralized and anonymous form of currency, free from government interference and banking institutions. Nakamoto's vision was a system where financial transactions could be made directly between parties without the need for a trusted third party or middleman. The underlying technology of Bitcoin, blockchain, was as revolutionary as the digital currency itself. Blockchain is a digital ledger, a secure and transparent way of recording transactions. Nakamoto ingeniously designed it so that each block of transactions is connected to the one before it, forming a chain. This makes it incredibly difficult to alter past transactions, providing a level of security previously unseen in the financial world. Bitcoin's arrival was quiet, its potential unrealized by many. Initially, it was a playground for tech enthusiasts and cypherpunks. However, the idea of a decentralized currency quickly gained traction. It wasn't long before Bitcoin was making headlines, attracting the attention of investors and sparking a flurry of discussions about the future of finance. Though Bitcoin was the first, it was not the only digital currency. Its creation paved the way for a host of other cryptocurrencies, each with its unique features and uses. The world was waking up to the possibilities of blockchain technology and digital currencies. So, Bitcoin kicked off the digital currency revolution, but that was just the beginning. The dawn of digital currencies and blockchain had broken, and the world was about to witness a revolution unlike any before. The stage was set for an expansion beyond Bitcoin into a world of endless possibilities and innovations. While Bitcoin sparked the flame, it didn't take long for the fire to spread. You see, Bitcoin was just the beginning. It was the first, yes, but it was merely the pioneer carving out paths in the digital wilderness for others to follow, and follow they did. Soon, the digital landscape was teeming with new cryptocurrencies, each one striving to improve upon Bitcoin's original design or to expand the horizons of blockchain technology. Let's take a closer look at Litecoin, for instance. Billed as the silver to Bitcoin's gold, Litecoin was designed to be faster and more efficient. It was created by Charlie Lee, a former Google engineer who saw the potential for a lighter, more nimble version of Bitcoin. He tweaked the underlying code, reducing the block generation time to 2.5 minutes compared to Bitcoin's 10. This meant faster transaction confirmations. Litecoin was a hit, proving that there was indeed room for more than one star in the crypto sky. Then came Ripple, a cryptocurrency with a unique twist. Ripple aimed not just to be another digital currency, but also a platform for global money transfers. Its goal was to make international transactions fast, cheap, and reliable. Ripple's innovation lay in its consensus algorithm, which allowed transactions to be settled in seconds. This was a game changer, offering a serious alternative to the traditional banking system's slow and costly international transfers. And who could forget Ethereum? Ethereum took the blockchain concept and ran with it, introducing the world to smart contracts and decentralized apps, or dApps. Ethereum's genius was in realizing that the blockchain could be used for more than just transactions. It could be a platform for a whole new type of applications, decentralized and secure. This opened up a whole new world of possibilities. And so the world of digital currencies expanded, but what about the technology behind it all? Blockchain, a revolutionary technology that powers digital currencies, but what makes it so special? Let's delve into the world of blockchain and unravel its power. At its core, blockchain is a decentralized digital ledger that records transactions across multiple computers. This decentralization is a crucial aspect of blockchain, providing the foundation for its other key features. Imagine a world where no single entity holds all the power. Blockchain brings this world to life by distributing authority across a network of computers, or nodes. This decentralization empowers every participant, eliminating the need for a central authority and reducing the risk of corruption or manipulation. Next up is immutability, another integral part of blockchain's appeal. Once a transaction is recorded in a blockchain, it becomes virtually impossible to alter. This characteristic is due to the complex cryptographic principles at play, which create a unique digital fingerprint for each transaction. This fingerprint, or hash, is dependent on the transaction data and the hash of the previous transaction. If anyone tries to tamper with a transaction, the hash changes, alerting the network to the anomaly. The final feature we'll discuss is transparency. In a blockchain, every transaction is visible to all participants, fostering trust through openness. This doesn't mean that everyone can see your personal details. Rather, your identity is protected through complex encryption, while the actions you take, the transactions you make, are open for all to see. Together, these three features, decentralization, immutability, and transparency, provide a robust framework for secure and trustworthy transactions. They empower individuals, foster trust, and open up new avenues for digital interaction. But the power of blockchain extends beyond these features. It's a technology that has the potential to revolutionize industries, from finance to supply chain management, by providing a reliable, secure, and transparent way to record transactions and track assets. As we can see, blockchain isn't just about supporting digital currencies. It's a transformative technology in its own right. With such powerful features, it was inevitable that blockchain would find uses beyond just digital currencies. Let's take a journey into the diverse world of blockchain applications. When we look beyond cryptocurrencies, we find that this technology is revolutionizing a plethora of sectors with its inherent transparency and ability to eliminate intermediaries. Imagine a world where you could track your morning coffee from the farm to your cup, with each step verified on an immutable ledger. This is not a distant dream, but a reality in the realm of supply chain management. Blockchain provides an unprecedented level of transparency, allowing consumers to make informed decisions and businesses to enhance their reputation for authenticity. Now, let's switch gears and delve into the healthcare industry. From patient data management to drug traceability, blockchain is paving the way for a more efficient and secure healthcare system. Patients now have control over their health records, while counterfeit drugs can be identified and removed from circulation swiftly. But it doesn't stop there. The financial sector, a realm typically dominated by traditional institutions, is also being disrupted by blockchain. Peer-to-peer transactions are becoming the norm, with blockchain providing a secure, decentralized platform for these exchanges. This shift not only reduces costs, but also democratizes access to financial services, opening doors for those previously excluded from the traditional banking system. And what about the art world? Ever heard of crypto kitties or digital artwork being sold for millions? Well, that's blockchain too. It's creating a new digital economy where digital assets are bought, sold, and owned in a secure and transparent manner, transforming how we perceive value and ownership. Indeed, blockchain has found its place in various sectors, but the story doesn't end here. As we continue to explore and innovate, there's no telling just how far-reaching the impact of blockchain technology will be. From transparent supply chains to democratized finance, blockchain is set to redefine our world in ways we are only beginning to comprehend. Enter smart contracts, a game-changing innovation in the realm of blockchain. Imagine you're making a transaction, but instead of relying on a middleman like a bank or a lawyer, you're entrusting your deal to a computer program. That's essentially what a smart contract is, a self-executing contract where the terms of the agreement are directly written into code. This code lives on the blockchain, a decentralized and transparent network where it can't be tampered with. Smart contracts automate and streamline transactions, making them faster and often less expensive. They're like vending machines for the digital world. You put a cryptocurrency in, the conditions of the contract are met, and out pops your digital asset or service. No need for a middleman to verify or enforce the agreement. Ethereum, a blockchain platform launched in 2015, was the pioneer in implementing smart contracts. It took the blockchain technology behind Bitcoin and said, hey, we can use this for more than just currency. Ethereum introduced a way to execute agreements on the blockchain automatically without the need for human intervention. It's a bit like how email automated the sending of letters, saving us a trip to the post office. The implications of this technology are vast. Smart contracts can be used for financial services, like loans or insurance. They can also be used in supply chain management to track goods from factory to store. And they're particularly useful in the world of digital assets, where they can help artists sell their work directly to consumers. But don't be fooled into thinking it's all smooth sailing. Smart contracts are only as good as their code. If there's a bug in the contract, it could be exploited. And once a contract is on the blockchain, it's very difficult to change. Still, the potential benefits of smart contracts are enormous. They promise a world with less fraud, lower costs, and faster transactions. They're a big part of why blockchain technology is considered revolutionary. Smart contracts have opened new doors, leading us to the most recent evolution in the blockchain world. From decentralized finance to non-fungible tokens, the digital world is constantly evolving. This evolution has seen the rise of two groundbreaking innovations: DeFi platforms and NFTs. Decentralized finance, or DeFi, is a financial system built on blockchain technology. It's finance without the middleman. Instead of banks and brokers, smart contracts on the blockchain manage financial transactions. This shift has been monumental, shaking up traditional finance by offering alternatives to banking, lending, and trading. Providing a more transparent, accessible, and potentially profitable financial system, DeFi has become a game changer. But it's not without its challenges. The lack of regulation, potential for fraud, and high volatility make it a risky venture. Yet despite these challenges, the potential of DeFi is enormous and continues to attract investors worldwide. Meanwhile, in the art world, non-fungible tokens, or NFTs, are making waves. These unique digital assets live on the blockchain and represent ownership of a specific item or piece of content. Unlike cryptocurrencies, NFTs can't be exchanged on a like-for-like basis, as each one has a distinct value. This uniqueness has given rise to a new digital art market, where artists can sell their work directly to collectors. NFTs have democratized the art world, providing an opportunity for artists to profit from their work in ways previously unimaginable. However, they too come with challenges. Issues around intellectual property rights, environmental concerns linked to energy-intensive blockchain networks, and market volatility are all hurdles that need to be addressed. And that brings us to where we are today, in a world where the possibilities of digital currencies and blockchain seem limitless. As we continue to navigate this digital revolution, we must also be mindful of the risks. The trailblazing innovations of DeFi platforms, and NFTs are just the beginning, and who knows what the future holds. In just over a decade, digital currencies and blockchain have come a long way. We've traced the journey from the birth of Bitcoin, the first digital currency, to the expansion of a whole universe of cryptocurrencies. We've explored the power of blockchain, the technology that underpins these digital currencies, and its potential applications beyond cryptocurrencies. We've seen how smart contracts have revolutionized transactions by automating them and making them more secure. And we've witnessed the emergence of decentralized finance, or DeFi, and non-fungible tokens, or NFTs, as new ways to use blockchain technology. But where does this journey lead us? What does the future hold for digital currencies and blockchain? The possibilities are as vast as they are exciting. One potential development is the mainstream adoption of digital currencies. As more people become comfortable with the idea of digital money, we may see more businesses accepting cryptocurrencies as payment, more governments launching their own digital currencies, and more people using cryptocurrencies for everyday transactions. Blockchain, meanwhile, could revolutionize industries beyond finance. Its potential for creating secure, transparent, and efficient systems could be harnessed in sectors ranging from healthcare to supply chain management, from education to governance. Smart contracts could become even smarter, with the capacity to handle more complex transactions and even to learn and adapt over time. DeFi could continue to democratize finance, making it more accessible and equitable. And NFTs could redefine ownership and value in the digital age. extending beyond digital art to include everything from real estate to intellectual property rights. As these technologies evolve, they could transform society in profound ways. They could democratize access to financial services, increase transparency, enhance security, and foster innovation. But they could also raise new challenges, from regulatory issues to privacy concerns, from technological hurdles to ethical dilemmas. As we look to the future, one thing is clear: the evolution of digital currencies and blockchain is far from over. This journey is just beginning, and it promises to be an exhilarating ride,